You're listening to Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin along with my co-host Garrett Cook. We're joined by Blake Morrow. He's the chief currency strategist at Wizetrade. He's got more than 18 years of trading experience. Blake, thank you for joining us this morning.
Hey, thanks, Brianna, and thanks, Garrett. Good to hear from you guys.
Absolutely. Well, we got these FOMC minutes that came out yesterday. Basically, conditions for a rate raise are approaching, though not at hand. What was your take on this report?
Well, obviously, let's talk about the market's reaction. The market's reaction has
Definitely.
been more of a dollar negative. So, and I'm surprised actually that the equity markets didn't get a bigger boost based on how the market interpreted the dovishness of the FOMC minutes. I wouldn't really write off not getting a September hike. I still think it's up in the air. I think that the probabilities have diminished a little bit, but I still think that the Fed looked at a much broader brushstroke of data. And remember, they talked about China. This was before the Chinese reevaluation of the renminbi or the yuan a couple of days ago. Anyway, so and that puts a whole new spin on things. But I look at the dollar as in a very, very broad consolidation that we've seen since summer, and it's still a very bullish pattern. It looks like the dollar may pull back a little further, which I personally am looking to position myself long going into September, especially as long as U.S. economic data continues to be steady. As long as it's steady and the Fed's looking at the broader brushstrokes of the market, I'm really not worried about the dollar too much. I'm looking to buy it on dips.
So you think there's still a small potential for a September rate hike?
I do. I still believe so. And I think that if you look into the FOMC meeting minutes, you dig into them a little bit. A lot of the highlighted, the news wires would highlight certain points of the minutes. But if you read a little bit further and a little bit deeper into them, they said, but maybe we see the risk. But, and then you never got the but. You had to kind of read through the minutes, and I think the market reacted off the headline. And again, the Fed, I take the viewpoint as there's never going to be a good time to raise rates, but the Fed probably looks at it that way as well. And, they're going to lose their window of opportunity, I feel, if they don't start raising rates soon. And I think that's really the reason why the dollar is still supported, because you still have a divergence in monetary policy between many central banks as it is.
That's a really interesting point. So you're kind of saying that we just need to really bite the bullet, and it might hurt a little bit, but ultimately we have to raise rates. We can't stay here forever.
Yeah, I mean, if you look at like the Ben Bernanke Fed, and obviously Janet Yellen was his right hand woman, if you will, and they really studied Japan and the effects of Japan keeping rates low for so many years and how to avoid the deflationary spiral that Japan's been in for so many years. And I think that Janet Yellen, coming from the Bernanke Fed, is also in the camp of not keeping rates low forever. We're keeping rates at crisis levels, and I think they do realize that. And like I said, they have a small opportunity probably, or a closing window to raise rates. And also keep in mind that they've also said that rates are going to rise this year. So I think there's still a chance that they'll raise them in September. It is a smaller chance, but it's still out there, and I still believe that the Fed can and will do it, and even if the market doesn't quote unquote want it, like Jeffrey Gundlach of Double Line, who said earlier this week.
Yeah. So you also mentioned China devaluing its currency. They did it 2 days in a row. What was your take on this move? Do you think it's a good way to keep their market from crashing?
Yeah, it is, and I don't view it as a negative. A lot of people, there's a lot of different arguments about, exporting deflation, elsewhere out of China. I think that the Fed has predominantly and primarily worried about the slowdown in China and about obviously their financial markets. They've even outlined that in the FOMC minutes. But the one thing that you have to take a look at is what China is doing is they haven't been very effective as far as their interest rate cuts, the reserve ratio requirement cuts. So they're taking another step about allowing their currency to rebalance, if you will. And a lot of that has to do with the IMF inclusion and how the IMF really wanted them to take further steps in allowing their currency to be more free floating. So I think there's and if you look at the IMF statement on what China has done, they don't view it as a bad thing. I don't think the Fed views it as a bad thing. I think the Fed probably views China as being proactive in their monetary policy, which hopefully will stabilize their economy. Now, their markets are obviously seeing some volatility, but maybe GDP growth will stabilize versus its very slow slide that we've seen over the last couple of years. And I think with China revaluing, or basically revaluing the renminbi a little bit, has allowed the Fed actually a little bit of breathing room too.
Are there any ways to play this at all right now as far as FX?
Well, you can play the U.S. dollar CNH for some people that are allowed to trade that, but what we're seeing for those of us that trade predominantly the major currencies and some of these commodity currencies, we're seeing a stabilization in like the Australian dollar and maybe the New Zealand dollar, which are directly affected by Chinese trade. We've seen the stabilization in the Aussie, U.S. dollar at current levels. It's taken a lot of heat. Now, I'm not necessarily inclined to buying the Aussie or the New Zealand dollar against the U.S. dollar because I don't know, and I don't think the market really knows how the dollar is going to react should the Fed raise rates, whether it's in September or December. There's a lot of debate whether the dollar will start rallying after a rate hike, which I think it will. Some people believe that the dollar will actually start to come down because of historically, once the Fed starts raising rates, the dollar does tend to pull back. But again, you have to take the backdrop that most central banks are actually cutting rates where the Fed's raising rates. So I think that any pullback is going to be fairly minor. But at the same time, I also think that the dollar is going to be supported, generally speaking, because they are raising rates and no one else really is. Now, with that being said, instead of playing the Aussie dollar against the U.S. dollar, the Aussie dollar, I think, looks very attractive against some of the European counterparts. So, trading the pound, like the pound sterling, or the euro dollar against the Aussie dollar, and playing the Aussie dollar long against some of those commodity currencies, or maybe even better yet, the Swiss National Bank has been kind of vocal recently, and playing the Aussie dollar against the Swiss franc has a really positive carry to it. So that's one of my more favorite trades. As a matter of fact, I actually established a little position earlier this morning, about 30 pips ago. So it's something that I'm actively pursuing is trading the Aussie dollar against some of these crosses.
So Blake, what's going to rise quicker, global water levels or rates?
Well, not global water levels or Arizona water levels. Let's put it that way. I live in Phoenix, so I think it's going to be rates. Now I know there's a lot of debates about how fast the Fed is going to raise rates, but I think a lot of that has to do with how the markets react to it, to a rate rise. Because you go back to the Ben Bernanke Fed, and remember Janet Yellen is really the Bernanke Fed. Just it's her own Fed, obviously, but she's taking a lot of cues and has taken a lot of cues from the Bernanke Fed. Mm-hmm. And the Federal Reserve is really, they may look for price stability and inflation and employment, but they really also want to make sure asset prices stay elevated. I think they're a big advocate of the trickle-down economics, if you will, and keeping asset prices high, and that money will shift from different asset classes on the way down. But if the markets have a positive response, which they should, I mean, if you raise rates a quarter basis point or half a basis point, the economy should be able to sustain that. So as long as we don't see any type of tantrums in the economy, I think rates can actually go up, rather quickly. But again, it's all dependent. I think the Fed's been pretty vocal about data dependent. Also, I think they will look at the reaction of the market a little closer and scrutinize it a little bit more than people think.
So how do you go about trading in the FX markets nowadays and getting some sort of certainty level? I mean, you had the SMB cut their anchor to the euro. Then we had China coming out. I mean, now I'm hearing stuff this morning just from Poland, and they're talking about the potential that they would be justified as raising rates in the near future. We also have Saudi Arabian 5-year CDS falling to its lowest level in some stretch of time. I got it in my pro, but I can't remember the exact amount of time. 3 years. So it's how do you go out into the currency market and actually take a position overnight and just hope that there's not some sort of sovereign nation that's just going to do something crazy with its currency? How do you mitigate against this uncertainty, especially in today's environment? Do you just pick a pair that you know really well?
I think what you got to do is you got to focus on the central banks that are really keeping rates low, and they have to. And that's why if the Fed, continues to raise rates, or does raise rates, and they look like they're going to continue to raise rates, you look at countries like central banks like the European Central Bank, the ECB, their quantitative easing process, it goes on to September of 2016. Mark Chandler, who over at Brown Brothers Harriman, we had a really great conversation with him last week, and he made a very valid point that every central bank that has done quantitative easing has had to do more quantitative easing than originally thought. When you take a look at the European Central Bank, they're slated to do quantitative easing until September of next year. Also keep in mind that they still have Greece inside of the Eurozone. They have the periphery inside of the Eurozone. And if the situation hasn't improved within the periphery of the Eurozone, the ECB may be forced to actually keep rates low and continue to do more rounds of quantitative easing, just as the Fed has done, and other central banks too, like the Bank of Japan and the ECB, or the Bank of England, which continues to keep rates low and continues to do quantitative easing. So, if that's the case, then I think you have to focus on those currencies where you have that divergent central policy. The divergent central policy is what's driven the dollar from the 80 handle in the dollar index to the 90, the high 90s where we're at right now. And that pattern and that trend should continue as long as central banks stay on that path. Now, I don't know if they will, and your guess is as good as mine. But if that is the case, I believe you have to focus on those currencies versus the ones like if you have Poland or maybe Russia that has to raise rates, or maybe Brazil that has to raise rates for their reasons. You have to stay away from some of those currencies.
So let's talk U.S. specific then. Are we entering into a feedback loop then, where a higher dollar ends up forcing central banks and treasuries to take actions that in turn end up forcing currencies higher, and then just becomes this insane feedback loop? Are we there yet in the U.S.? Do you see anything like this out here?
I don't see anything like that. I hope I'd like to look on the brighter side of things and hope that that's not the case. But I think a lot of that has to do with inflation too. And inflation is that granimal underneath the surface that maybe is going unseen. But we're obviously seeing little bits and pieces of inflation starting to tack up. To pick up a little bit. So I think that it could turn into that, and I think that's the unknown is if inflation starts to get away from the Fed. That's the genie they don't want to let off the bottle.
Okay. Well, Bree's been patient with me, letting me ask you a few questions. So what do you think, just one more, where do we end then for the year? Where do you see Q4 ending up? Where do we end with the dollar, and what does it mean for U.S. indices?
Well, as far as the dollar goes, I think the dollar continues to go higher. So, end of Q4, I wouldn't be surprised to see the euro back down towards its lows. But I still think that there's, I always tell people, if you buy the dollar now and you close your eyes and you open them 6 months from now, you'll probably be happy that you bought the dollar. Doesn't mean that that's going to be the low between now and then, though. The euro dollar actually looks like it can travel up to 113 to 114 before turning back down again. So, again, a lot of that is dependent with the Fed, and I think the market is going to benefit. The dollar will benefit from the Fed raising rates. So, end of Q4, euro dollar is probably below 110, closer to 105, I would assume. Now, as far as U.S. indices, that's a good question, Garrett, because I believe when you tighten monetary policy, it's kind of like, I always use the example of you gave a kid a piece of candy, a lollipop, years ago, and you've given it this chewy, and chewy is a lollipop, and it's been really accustomed to having a lollipop in its mouth. Although the kid's gotten a little bit older and is a little bit more rational, you're still pulling the lollipop out of the kid's mouth at the age of 5 or 6, and the kid's probably going to throw a little bit of a tantrum. So, equities, I'm assuming, will pull back a little bit, but I look at these pullbacks and these corrections in the U.S. equity markets as opportunities to buy them. And so even if we do see a 10 or 15% correction over time, as we work off this easy monetary policy that we've seen maybe over the next year, I still think it's going to be a great opportunity. So even if stocks fall another 5 or 10% from here, I think people will take it with open arms, especially the bulls out there.
So is the Wizetrade community? Are they a happy group of folks going into this Q4? Some of the bankers and some of the guys on the currency desks and in the different institutions that I've spoken with they've been kind of frustrated with the current trading levels, not only in equities but it seems like around the world. Most guys don't really seem too worried about what happened in China. They kind of wrote that off as a non-event. Now these are bank traders, so it might be a little different than the community that you're working with. So how's the Wizetrade community viewing this currency trading market right now? Is most of this on the up and up, or you guys, tend to be cynical, perhaps sometimes the way I might be?
That's a great question, and I think we've had, when we look, we're a bunch of retail traders for the most part, and so, and we've got some few trading desks that are in our community and as well. But we've been very much prepared for a sideways consolidation in the dollar index. I mean, everybody sees my dollar index chart every single day, and for the last 2 months we've had a triangle in it, and that triangle and that apex has been consolidating. So as long as you stay within that, that context that we are in a consolidation, try not to buy into the rallies and try not to get scared on the dips, and you buy the dips and sell the rips. As long as you stay in that mindset right now, we're taking it with a grain of salt. It's a consolidation. It's due. It's been a big run in the dollar, and I think all of us are looking for a big move going into the fall. Whether it's a big rally in the dollar, whether it's a big sell-off, I think us as the retail, nimble type of traders, we're ready for it, and we're looking for it, and we're waiting to get past these last 2 weeks of summer.
Yeah, wouldn't that be nice to finally get through these? So finally, since we talked about currencies and it's going to be kind of hot for the remainder of the year, is there any sort of public outlet that you know of that could be a good reference point if we wanted to get currency prices? I know from talking to Maria and some of the people that are in your group, if you use just one outlet for your currency trade levels, for a high or low on the day, that might not be accurate, and that you would actually need to have a bunch of brokerages in order to get an accurate high and low in the FX market. Is there anything public that our listeners could use that you would feel trustworthy recommending to use for highs and lows in FX?
Well, I think there's a couple of trusted sources that I use from an educational standpoint, and my parent company may not be super happy about me mentioning these, but I love like Forex Factory, I love FX Street, I love Forex Live. They're an independent analysis website. They all offer some really good prices. If you're looking at live quotes, there's an argument between are European GMT quotes better than closing basis than New York quotes, and I think for myself, I've always relied off New York closes. So finding a new source like I said, FX Street is good, Forex Factory, and Forex Live, I think are all good trusted names in the business that you could use.
All right, awesome. Well, Blake, thanks for answering my questions. I'm going to turn it back over to Bree and enjoy the rest of your trading week and the weekend, man. Appreciate you coming on.
Thank you, Garrett. I really appreciate you.
We've been on the line with Blake Morrow. He's the Chief Currency Strategist at Wizetrade. Blake, thank you so much for giving us such an awesome overview of the FX trading sector this morning. We really appreciate it.
Thanks, Bree. Have a great one. Thanks for having me on.
All right. Thanks, you too.